Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 7th of October. All right, now we're coming right into the business part of the week. And unfortunately, like a lot of these big US numbers, they come on Fridays, which is the real big shame about that is we have a small period of time to trade the outcome before it hits the weekend. There's a lot of rebalancing, squaring up, and then we start again Monday. So, I've said it for years. I'd love to have these numbers come around Wednesday because then you get 3 really good days of directional trading if we get the right outcome, and that gives us plenty of opportunities going forward. Now, so what we're going to look for, right? This is, I've got the non-farm payrolls up here in front of me. The main component here, these are the Reuters poll. Okay, I've got these off Trading Economics. Now, the main numbers that you need to be looking for are the non-farm payrolls change itself. So that number is 500K, right? That's the underlying number. The market will move on that number first, right? That's so when you're trading for years, you look at that number, and if it's stronger, you buy dollars. If it's weaker, you sell dollars, right? The secondary number is the unemployment rate, right? 5.1%. So you get the immediate reaction on the non-farm payrolls change, right? Then traders will look at the unemployment rate, see if that matches up or not. If it's varying, well, that's where you can get some sort of disruptive price action. And I'd say as a sort of third tier number to keep an eye on is the average earnings year on year, right? That has been edging up as well. That's something else to consider. So really, when you come back into trading, you're looking at this number here and the unemployment rate, and you're gauging. Now, ideally, I'll just give you an example here, like 700K and say 5%, right? 2 positive numbers, you're going to see a decisive, strong move in the dollar, right? That is without a doubt. So, but what you've got to be careful of, and this is, I say, don't rush in full-heartedly here, because what can happen is you may get, say, a 650 here, right, on the change. Market shoots up, strong dollar, and say the rate comes in at 5.2 or 5.3%, it corrects very quickly. And that's where you get that volatility around the release, right? But all things being equal, and some of the guys mentioned to me yesterday that, Jerome Powell is like, you know what, if the numbers, they don't need to be necessarily good, they just need to be on track, then we're going to start tapering those asset purchases, right? And what we've seen, right, over the course of the last week or so, is the US Treasuries, right? They've gone through the roof. They are now sort of sitting close to the highs of the recent price action or yields. And that sets us up for a very big opportunity. Now, to me, and I've seen this on a couple of the articles written out there, this is going to set up the market for an interim quarter of strong dollar, right? Where the dollar just outperforms everything by a long shot. If they start tapering their asset purchases, they're 6 months to 12 months in front of every other central bank. The economy's coming back, and then they can start sort of dealing with, what happens from there afterwards. But this will give us a strong dollar. As I said, as expected, better numbers, even better, right? Our worst case scenario here, right, for the market, or as far as trading goes, is a number that's weaker, right? If you get a 350 print and a 5.3%, right, that doesn't kibosh what the Fed's going to do, but it may slow them down for a little bit. And that'll bring the dollar back into the range. Should have it testing this trend line here on the dollar index, and I'll show you the other major currencies in a second. But that's our worst case scenario, right? You're really crossing your fingers and your toes for a strong non-farm payroll number, right? So as expected here, so 5.1% for unemployment and a 650. I mean, that's enough to send the dollar through the roof, right? Now, why I say through the roof is, let me just come over to the charts. I've just had a really good look through a lot of my charts here. And you know what? There's basically no support levels here on the downside in euro, right? There's no, you could go back and find the absolute low around 104, going back an eon ago to this current level. But all you're doing is focusing on that low point. That's not necessarily support, right? So the dollar looks like, especially against the euro, it just needs an excuse to run, right? So that's where it is. And the dollar index obviously shooting to the top side in preparation for a good outcome. Dollar Swiss, right? I still think this is a bit of a sleeping giant. I think this has got a chance to, it's like trading mid-range, which is a good thing, right? You might think, well, yeah, mid-range is no good. Well, in this situation here, it actually is, right? Because it gives you a chance to get in either at market or through that next resistance line. Dollar yen is tracking the US treasuries. I've got the 10 years yet there in yellow overlapping or overlaid. Those yields continue higher. Dollar yen's going to keep going up the way it has been. So that's another good potential opportunity on a strong number. In actual fact, if the number comes out really weak, you might get an opportunity to bang out some dollars here. You get a bit of an itchy barn strategy on dollar yen, where if we get a weak non-farm payrolls, yields should come off a bit. We've got dollar yen breaking down through support trend line, as well as the bottom of the cloud. That looks like a pretty good opportunity also on a weak dollar, right? So what I'm doing is, I know the numbers I expect to come out. Now I can come over to the charts and actually really work out which pairs I should trade on strong numbers, which pairs I could trade on weak numbers. Now, it's always a good bet or a good situation or a good strategy, I should say, to work out, like, don't just go in just with strong dollar across the board. Now that works, right, if we get good numbers, but what about if we don't, right? Some of these pairs do have good setups if the numbers aren't that good, right? Excuse me. And the dollar yen is definitely one of those. Dollar CAD, well, I tell you what, oil's been bouncing around a bit. It's just dropped back to 77 bucks. Dollar CAD's in a tricky situation. I'll come back to that because we do have Canadian employment numbers released at the same time as the non-farm payrolls. So you've got like 6 or 8 variables there for the US numbers. You've got about 4 or 5 for the Canadian numbers. Trying to trade the dollar CAD when those two employment numbers are released at the same time, which is every second month, it's problematic, right? It can go all over the place. Of course, if you get strong US numbers, weak Canadian numbers, you get a hell of a move. But trying to work that out whilst looking at all the other currencies is a little bit of a tricky one. I'd say if you want to trade the Canadian data with the non-farm payrolls, you just solely have to focus on dollar CAD, right? And you could potentially pick it off. As I said, you got to think quick and you need a bit of luck with all those numbers lining up. Otherwise, it's probably too hard in the too hard basket, and you can find easier things to trade like these other instruments I'm showing you. So looking at euro, right? I really like the setup here, like downside. There's nothing on the downside. So strong numbers here. We get a big push to the downside. You'd have to get exceptionally weak numbers to get it back up here, testing this resistance line. All right. The sterling, well, yeah, I'm still a big fan of sterling downside, and it's near resistance, right? So this is almost a situation where you could be looking either side of the market. Now, I'm not suggesting you're going with pending orders both sides of the market. That's problematic at the best of times. Now the biggest situation, let me explain what happens when the non-farm payrolls comes out, right? It's the biggest, hairiest number in the market, right? Outside of a central bank, Federal Reserve release. Liquidity is pulled out of the market, right? You may think there's a rate there, but it's very small volume. As soon as it's hit, there's no prices behind it, right? So what you get is on the release, especially with the Canadian numbers released at the same time, you're going to have a price spike either side of the market. 30 or 40 points is customary. And then the liquidity comes back in straight afterwards, right? So that's something you need to be aware of. Now, the Aussie, it's quite strange, right? There's it's just sort of been banging away here. We had the lows down here around 71.80, and since then it's been trading in a bit of a range. It is sort of lacking clear direction, but to me, it's actually found a bit of a home down here. We really need strong US numbers to get this thing moving topside. I think, if anything, the Aussie dollar could be one of those pairs that you're looking to trade if the US numbers are weak, right? Sterling's close enough as well. As I said, it could be an opportunity topside. And then you come back to the Kiwi down the end here, and it's sort of sitting here primed. Now, the RBNZ did come out, raise rates yesterday, right? You see the wild price action there. Now, for those traders who do have access to our training, if you go into the advanced Forex Trader workshop videos, have a look at the video around what happens when the central bank changes rates as expected. and you'll understand why it sort of went up a little bit and then fell straight back down. Right? The answers are there. You just got to pay a bit of attention to that. I have to thank Joshua for pointing that out. He sort of was banging his head against the wall afterwards, because you just need to know what happens. And a lot of traders that I talk to, right, and they're saying, well, do I need to read a lot more things? Do I need to get books? Do I need to this to work out what's going on? No, you don't. All the information is in the courses. What you need to do is relax and get trading experience, and then using us as a sounding board to basically go through your trades and work out where you made mistakes, right? It's very easy for us to train you once we know what you're doing as far as trading. So the traders in the trader development program, keep that up, because that's where the answers are going to come from, right? And then we can either point you back to some instructional video or actually just tell you exactly what's going on. So the Kiwi following the RBNZ, let me just come back to that. They are going to be looking at inflation and employment from here, right? So that was just a short little spike. If anything, to raise rates a little bit, try and slow down the housing boom, house price boom in New Zealand. So that's fine. That'll work domestically. But as far as the currency goes, it's a flash in the pan and we're back trading mid-range. The Kiwi for me right now is extremely neutral, right? So it's another pair that you could potentially see move to the top side or downside. It could move both ways very freely, right? Dollar CAD, as I said, bit of a tricky one. Euro will bounce, obviously, if the US numbers are weak, but you got a fair 50 odd points, a bit of room to move, whereas sterling, Aussie, for that matter, are right on resistance, right? That's why they would be better trades, because momentum will be kicking through those stop losses and you've got a bit of extra action there. So sterling and Aussie and dollar yen, I think weak US numbers, they're the pairs to be trading. Strong US numbers, even though dollar Swiss is mid-range, I like the idea of it up, and it goes with a weak euro, right? So if euro craps out, and as I said, there's no support down here, so all we need is strong US numbers. Euro should fall and keep going, right? Especially if they're really big numbers. Dollar Swiss top side, also with that dollar yen, it is tracking the treasury yield. So I think strong US numbers, we get the treasuries higher and dollar yen goes top side as well. So dollar yen is one of those pairs that could go either way. Kiwi, bit of both. So when you go through and you're analyzing the instruments that you could potentially be trading, there's some standouts, right? There should be some standouts for you, what you can look at. Now, euro, the only thing about euro is there's no like clear entry. The entry will be the release, right? There's no technical entries down here. I don't mind that. Usually I would sort of, probably reduce my risk on that event, but this is so big. If it's strong, euro's just going to keep going because there's nothing around, right? So that's where that comes into play. Sterling and Aussie, definitely top side. If you've got dollar index, dollar Swiss, I think they're good trades for a strong dollar, and actually probably dollar yen as well. And so that's where we are. Now, let me just come back to dollar CAD, right? Let me just bring you back across the other side. Now, for those Canadian traders out there, and everyone likes trading their own domestic numbers, as you'd expect. Now, what we've got a situation here is the employment change. The poll is 65K, right? You have to excuse my writing there. So that's the first one. And the unemployment rate, 6.9%, right? Where we got there, 6.9. So an improvement in the rate from 7.1 and a slightly less number there than the prior number, right? So 65K, 6.9. In reality, right, let me just get those in there. The Canadian numbers are easy to trade because there's really the two key focal points. It's like the non-farm payrolls and the employment rate. There's only two real numbers. Then you can cherry pick, changes in full-time employment to part-time. Obviously, full-time is more structured. It has more weighting. So that could be a big thing as well. But Canadian numbers, 65K, 6.9, only two numbers there that can really give you the outcome. That's why it's an easier event. But the problem is it's coming out with all the other 7 or 8 US non-farm payroll variables, right? So that's a hard one. So if you're looking at the dollar CAD, that's where it is. Let let me just think of anything else. So outside of that, I think if anything, you want to have a good look. Now's a good time because the non-farm payrolls, we've been waiting for strong numbers. As we've been informed, Jerome Powell's like, if the numbers are as expected or on track, that's good enough for us. What you want, it's a good time to be having a look through your longer term charts, right, through your dailies, and have a good look around where everything's sitting. Like you can see here on the long term charts, right, Euro is in the middle of nowhere and it's ready to keep disappearing into the abyss. Sterling, well, it's got a bit of structure. It's come back to test this sort of triple bottom there, this little sort of cheeky trend line support. I still think it's got a lot of room to the downside as well. Aussie's broken down, coming back to test that sort of bull bear line. I mean, it's a bit, as you can see, it's a bit more sideways, as is the Kiwi a little bit. But these pairs will move with the dollar, right? Dollar Swiss, well, you know what? It's got a little bit of work to do to get top side. The dollar index is already moving, and dollar yen's already shot to the top side. Funny thing is, dollar CAD, with all the variables like oil, Canadian data, US numbers, etc., it's now sort of below a support trend line and just sitting in the middle of nowhere. That probably makes it even a little bit harder to work out whether you buy or sell dollar CAD on the release of both employment numbers. It's a bit tricky. Euro is the standout. Like long term, it's a standout. Now, with some of these numbers, let me just clear the screen there. If anything, you could be like, now that the Aussie's back in the range, as is with Kiwi, right? Redraw those trend lines there. Now, I wouldn't be doing the same here for sterling because it's already broken down. I know it's retraced a bit, but it's really, I mean, you could argue, but if you put the trend line out, you're just looking at that last level. So to me, it's already sort of broken down and ready to keep going. Whereas if you redraw your trend lines on the daily charts on the Aussie and Kiwi, you can see clearly where your potential entry levels are, say top side or downside. Now, top side, it's miles away. Downside, it's not so far away, and the Kiwi's pretty close as well. So it makes a better argument there to be getting short Kiwi on a break of that trend line, especially straight after the RBNZ's raised rates, right? You get a few less knowledgeable traders getting long Kiwi thinking, yeah, they got higher interest rates, that should be good. But I tell you what, it's primed for a bashing to the downside. So that's where we are on the longer term charts. I'd say, if anything, just coming back to, let me just share that page. Coming back to the main theme of the market, just have a look through your, your various bits and pieces. There's not much going on at the moment, right? They're all sort of geopolitical little stories to try and keep you interested. I would suggest, if you do have Metastock or a news service, make sure you've got the major news, the breaking major news up, right? Because sometimes when the numbers are released, the actual result could be posted quicker on the breaking news section as when it is posted on the main economic calendars, right? So that's just something to bear in mind. You want to have as much information at your fingertips as you can, right? So, and then if you're not sure about trading the actual number itself, which is, as I said, problematic with the liquidity situation and volatility, after the release, keep a close eye on what happens to the US Treasuries. If the yields start going up, we've got a strong dollar. And what we should see is the equity markets come off as well, right? The dollar pair should be going up. And if I draw a line under CAD, the dollar block, Euro, Sterling, Aussie, Kiwi should be shooting to the downside, right? All we need is, right, a number bigger than 500. I mean, it'd be like in the day, we used to get like huge variables. Like, say the number's expected to be 500 and you get like a number posting like 950, right? And you just see the damn thing just take off. That would be ideal. Are we going to get it? I don't know. Probably not. But focus on those numbers I posted there earlier, and then work out which pairs you can realistically get into. You've got to think about risk management at the same time, right? This isn't the be all and end all. It's a good opportunity to get into the trade. The best trades will be after the number. If they are strong, we get a trending market. If they're weaker, the dollar's going to break back into the range, and there's opportunities there, probably short term, but not as good as if they're strong numbers, but still opportunities to make some cash. The big move, I can't sort of emphasize enough is, and we've been waiting for ages, is just good, strong numbers. We want solid numbers out of the US. We get those, we get a strong dollar move. That lasts for not only today, but for next week, the week after, probably till the end of the year. All right, so that's how important that is to me. I'll tell you what, I'll be reasonably frustrated if the numbers do come out slightly weaker, because it slows down the dollar move. We get all the unwinding of some of these trades, which, as I said, you can make a few bucks out of, but it's nothing like the cash we'll make if we get a trending dollar, right? So think of that. So prepare yourself for a strong number, a weak number, and a number that actually is as expected, right? If it's as expected, you've got to prepare for that, because otherwise you're going to run into some performance anxiety as you think this is a big move and you should make money. Well, you know what? The fact is, if it's sideways, it comes out as expected, we aren't going to have too much cash on the table right away. All right. Once again, huge volatility, no liquidity at the time of the release. So be very careful if you are placing pending orders. You could get run over on both sides, right? That's not a happy way to be. The best thing to do is reduce your trade size and hit the market when you see the numbers, especially once again, the non-farm payrolls, right? And the unemployment rate, the two key numbers. Same for dollar CAD. These two key numbers, as I said, 500 and 5.1 are expected. Focus on those two. If they're better, it's a good opportunity to get into one of those instruments that has a good setup for a strong dollar move. And if they're weaker, look for an instrument that has a potential weak dollar move, right? There's a few out there. All right, guys, hope that covers all bases for you. If not, get on the virtual trading desk and I'll answer any of your questions. Good luck. Keep it real. Just remember, if it goes pear-shaped and you have too much in it, if it's going to hurt, it's the wrong trade, right? You're trading too big. Good luck and all the very best. Cheerio.